John Piper with the Tuesday video, and it's Tuesday the 12th of May, and we're going to look at Bitcoin to start with. We've got the 5-wave pattern up, 1, 2, 3, 4, and now 1, 2, 3, 4, 5. I'd say this is now complete, 10,066. We had the halvening yesterday. The halvening means that the mining reward has halved on Bitcoin. Quite how much effect that really has, I'm not sure, but it's certainly become a focus of attention because big rallies have begun shortly after the halvening in, I think, 2016, certainly, after I joined. Or just the halvening took place before I joined, and then I joined afterwards, and we had that huge rally up to 20,000. But okay, as usual, it's a case of sell the rumour, buy the news. Let me get this right. Buy the rumour, sell the news. So the peak came in before the halvening took place, and we already had a bit of a decline coming in. I think Paul Tudor Jones also was weighed in around here to say he's buying Bitcoin. I doubt he's been. I mean, he probably meant over time. So this decline is probably ideal for his purposes. I think we've got an ABC forming. Let's have a look in a bit more detail. This is the 30-minute chart. So we can see a clear ABC here, A, B, C, A wave, A, B, C, B wave, and now we've got, looks like an A, a B, and a C, and the C wave will equal the A wave a little bit lower down. And my calculation is 7184. By all means, check this for yourselves. We recommend this. That takes us below the 38.2 level and down close to 61%. May want to go lower. I mean, if this is a wave 2, then we may see go to 50% around 61.88. But for the time being, I find the C equals A ratio quite useful. That point waves A and C are obviously equal. So it looks nice and neat. I'll be looking to buy at that sort of point. Once we get there. On Ethereum, we have the 5 ways up. We've discussed that. Not happy with this, rather sort of. I mean, it's not a very impulsive move. Gets a bit better with wave 5. We already have an ABC here where C is I think slightly longer than C already, down touching 38.2% level. I mean, we could easily see more downside here. It's I mean, there could be A and a B and a C, so we need to monitor the form of the action off the current C. Okay, so far we have actually got quite an impulsive looking first move here. It could be a 5, that could be an ABC, but it's rather drifting sideways now. It may be a bit early in the piece. I'd be happier when Bitcoin has seen that lower level, the wave C target, for Ethereum to actually generate much. But there is, we have seen a full ABC there, so there is that. And there is this, but there is also this, which is not so encouraging. Alright, gold continues to go sideways, although the gold miners are doing rather nicely at the moment. I think Newmont Gold was about 30% the last few weeks. So although gold itself is a bit stationary, the miners are catching up quite nicely. No change of opinion here, it's just going sideways. I'll wait to see something more positive. ABC here. Anyway, I'm happy with my investments, ETFs, etc. I will add to spread bets when I see something else. I will buy some spread bets when I see something more interesting. Silver's the same. It's just flatlining. In fact, for the last last week, really. Quite strange, in fact. You wouldn't expect that, but then of course markets do what you don't expect. Well, that's their forte, really. I'll probably look at the Dow. I think I'm quote a bit from the Elliott wave theorist. I've been taking this actually since '86, I think. It's about almost 35 years or so, not consistently, but on and off. The heading is rational reaction or non-rational impulsiveness. The theme of the socioeconomic theory of finance, that's the theory that Robert Prechter, who created the Elliott wave theorist, has come up with to explain why Elliott wave theory works. Although it goes rather beyond that. It's an interesting theory, in fact. I won't go into that any greater. The theme of the socioeconomic theory of finance is that financial pricing is non-rational. It is not 100% rational, as the efficient market hypothesis would have it. It is not partially rational and partly emotional, as Keynesian economics would have it. It is all non-rational. If you consider this thesis too radical, just witness the past month and a half of recovery in the stock market. A deadly virus is running rampant in the world, which is clearly true. The global economy is contracting at a record rate, also true. The US economy is hemorrhaging jobs at a breakneck pace. Debts are going unpaid. Banks are facing failure. Governments are blundering their way through the pandemic, banning the most innocuous of activities whilst allowing dangerous ones to continue. Yet investors are bidding up stocks with a fervour that is in some ways is unprecedented. Just in a couple more paragraphs. Yes, the rally is of primary degree. You may think that our wave labels are just notations. They are not. They mean something. When we labelled the first quarter decline in the stock market primary wave 1, we meant that it was a decline that in other contexts could have taken a year or two to unfold. When the Dow fell 38.8% in 2000-2002, it took 3 months shy of 2 years. This year, a decline of 35.4% in the S&P took less than 5 weeks. The same thing is true of the post-March 23 recovery. It has been a rally that in other contexts could have taken as much as a year to unfold. In the S&P, the rally lasted 5 weeks, 2 days. In the Nasdaq indices, it's extended to 7 weeks, and in that brief time, the S&P rose 34.8% and the Nasdaq 38%. These are huge moves. The rally has been so big that momentum-based indicators are issuing signals that a new bull market has begun. All such indicators are quant-based. Absolute quantities do not capture the market's essence and can be misleading when the wave environment changes. Whether this is one of these times, we will soon find out. Sentiment indicators are at a high level of optimism. Even though the Dow and the S&P are still well below their highs of April 29th, investors are more bullish now than any time since February. The CBO put-call ratio has fallen below its extremes of April, and its intraday low today was the lowest since February the 19th, the day the S&P topped out. The VIX fell today to its lowest level of the rally, which means that expectations for a rise in volatility are lower today than they were on April 29th, the day of the highs so far in the Dow and the S&P. Optimism is increasing so fast that it's outrunning prices. This is actually quite alarming because the essentially sentiment, what it's all about, if everybody's buying the market or has bought the market, it's got to go down. So these very high levels of positive sentiment are a big negative for the market, and support the view that we've got another leg down coming. I'm not saying it's right, I'm just saying it's quite interesting, and it sort of confirms the way I think about markets. So I thought it would be useful to have it set out in a different format. It's well worth subscribing actually to the Elliott Wave Theorist. I think there's a trial subscription, but it does have some quite interesting stuff. Over the years, you should learn quite a lot about different market approaches. Right, so to get back to the charts, this is the Dow. Now, I count this as a three-part move. The Elliott Wave Theorist is suggesting there's a 5 in here. It's like a 3, 4, and 5. I mean, it's not impossible. You can, do this. It looks to me like an ABC. It doesn't matter very much, in fact, because we have got, under both counts, this is a corrective move, which I believe it is, A, B, C, although counting it as a 5. We still have another leg down due, which is the key thing. And it's what that leg does, which is important. If it takes out this low, around 8,157, then that would suggest we have another leg down of possibly equal length to the first leg. And that's the big question mark. Are we going to see that kind of move coming in? Those sentiment numbers rather suggest we do, if they're correct. I haven't verified those. I would have thought personally that the sentiment wasn't that high, but they monitor this quite carefully, so I'm not going to disagree with them. However, if we turn our attention to the action since the peak, we've seen this impulsive decline, which could be a wave 1, followed by an A, a B, and a C up to there. So it's actually gone above the C equals A ratio. But we're not really seeing at the moment a classic 5-wave decline. It looks like an ABC, in fact, again. I guess we could count it slightly differently. So we could say this is a 1, 2, 3, 4, and a 5. that count is valid, just a much bigger fourth wave. Now an ABC here. Let's go down leg again. My focus has been on looking at this as a wave 1, followed by an ABC at the moment, which has just hit the 50% level, so that's interesting. But it does need to be confirmed really by going down, and so far we haven't seen too much of that. But of course, it's only just happened. So I mean, obviously, we're going to see a very big decline. It'd be good to trade that decline. Obviously, we're going to see a very big rally. It'd be good to trade the rally. I think we're going to go down in the shorter term, and that may well accelerate. Looking at the DAX, the pattern is rather different. We have this again. I count this as an ABC, whereas you can perhaps have a 4 and a 5 down here, but a clear ABC A and B, and now an A, B, C. I gather it's also 3 peaks and a domed house. It's supposed to be. I've never really come across that before. Apparently, it's a very bearish signal. So from peak C, let's have a look at the action since then. Right, so this is actually the peak of wave 2. Clearly impulsive in wave 1. Clearly clear ABC. Tracing over 61.8%. And now wave 1 and a very feeble wave 2. So that's looking fairly convincing that we're going to go lower at this point in time. Alright, so looking at the action here, again we've got a pretty clearly impulsive move down, followed by an A, B. The C so far hasn't actually taken out the high here, but that may be coming pretty quickly. Could be a triangle, of course, unusual in 2-wave, but it could be a triangle. And finally, look at the 5-minute chart of FTSE, where again we have a clear 5-wave decline, impulsive sell-off, followed by an A, B, C. Again, just above 61.8% level. This is a clear ABC, ABC. This, of course, is threatening the high, maybe taking out the high, so that count may need to be changed. But what's missing at the moment is any real sign of any downside. I mean, the DAX is looking quite weak, but it's currently rallying, and we haven't seen the start of the next leg down yet, which is clearly an important part if we're going to fall from here. So one has to keep an open mind on these things, but that's my current focus, is on a possible sell-off from this point. I think we're going to. I doubt the rally's got much left in it anyway. So I think a sell-off is the next part of this this particular screenplay, as it were. But what form it takes, of course, is always uncertain. So on that note, I'll call it a day. Hopefully that interesting and useful, and that the Elliott Wave stuff wasn't too dense. Have a great day. Thanks for listening, and bye for now.